Hello and welcome to Specialist Lending Solutions TV in partnership with Castle Trust Bank. I'm Shakina Sawahene, Commercial Editor at Mortgage Solutions and SLS. Today I'm joined by Robert Oliver, Director of Sales at Castle Trust Bank, Anthony Rose, Director at LDN Finance, Chris Corns, Operations Director at Crystal Specialist Finance, and Richard Merritt, Head of Strategic Development at Simply Biz Mortgages. Thank you all for joining me. Previously, we were speaking about how buy-to-let investors are being more diverse with their investments. Richard, what factors would you say are driving such trends in the buy-to-let sector?
So I think the first point to make in terms of what's driving trends in the buy-to-let sector is really just the demand for property. There's a lack of stock available. That's probably the single biggest challenge facing any consumer, whether you're buy-to-let or mainstream residential, first-time buyer, home mover. But what we've really seen over the last 18 months is, post lockdown one and the expectations that the market might dip by 15%. It's then ended up supercharged by the importance of home, the people wanting to move, and obviously the opportunity that's been created not just for mainstream purchases, but also buy-to-let landlords by the stamp duty holiday. Fast forward to today, and in most areas we're seeing a 10% uplift in prices. So I think really the key point on why buy-to-let is so attractive at the moment are those underlying market fundamentals.
So I guess over to you, Anthony. What trends have you seen that are driving this attraction?
As a firm at LDM Finance, we do a large amount of specialist finance, and on the permitted development side, I think we've seen big opportunities with the changes that have come in recently as to how that could help drive certain parts of the market. I think the ability to do two-story extensions and extend much larger footprint from your own property gives a much greater opportunity for products such as like light refurb, heavy refurb, and bridge to let products. So I think it'll be interesting to see, and we've already seen it to some extent over the next year or so, how the sort of smaller developers and professional landlords respond to that, and whether that's going to be something that drives that sector of the market.
And same to you, Rob. What factors are driving these trends?
Yeah, we've seen a slightly different stance on this. So notwithstanding the general supply and demand issue that Richard's spoken about, we've seen some of the larger landlords, particularly on some of the larger developments and under the permitted development rules, as Anthony says there, that some of the conversions, we've actually seen the actual landlords retaining the property. So historically, if you've done a development of X number of units, you would want to probably sell them. And just transact and move on to the next one. We're seeing landlords now holding on to those because the yields they're getting on there, and B, it's the supply and demand. And to bring it to life, we had a development just outside Birmingham where I think it was about 67 units, and having had an open weekend with the letting agents, they actually let, I think it was 51 units in one. So the actual developer changed his stance and thought, I'm going to retain these because actually it suits my financials better to actually do that. And we were able to create some sort of bespoke constructed development exit product that allowed them to retain those for about 6 to 8 months. And then what they'll do is they'll package that up and then sell that on as an entity.
And Chris, in your opinion, what trends are driving the diversification in the sector?
I think something that's been touched on there with housing demand. We've got a growing population, we've got a shortage of supply, which in turn obviously will drive up price. People still need places to live, whether or not they own or whether they rent. So therefore, there's still a huge demand for properties for people to live in. Landlords therefore see that as an opportunity to jump into. So we've got quite a few at the moment looking at things like social housing or things that are let to commercial entities that they can let for a longer period. And I think the market's also facilitating that, adding, as Rob touched on, the development exit products. There's now green mortgages coming in. There's more of these social housing type mortgages.
And Rob, you mentioned this a little bit when you spoke about the size of the properties and people retaining assets. How are these trends playing out in the types of properties and locations that investors are going for?
So it's interesting. The diversification in the market is actually driven at more people post-pandemic to be probably out of the city centres. Now, whether that was to do with the retail environment and people being on furlough, however, we're seeing that trend going the other way now. So we're seeing a lot of people going back into the cities where historically they've been wanting to rent further out. So based on that, I think it's landlords picking up where they can pick up, and if they want to do a refurbishment project, it's the conversion of the high streets, or whether they're moving further out of town. And as organisations probably move more towards the flexible working patterns where people are working from home, the need to have 50, 60, 100 desks in a single commercial space is probably gone now. Therefore, this is opportunities for retail, for residential to move into that space.
And Richard, what are your views on this?
I'd wholeheartedly agree with Rob on that note. During lockdown, everyone was itching to get out of cities. Space and green air and the coast became sort of premiums for people. But I think as we see a gradual return to normality, and in particular people getting back into offices, as Rob touched on, I think flexible working will have an impact, and I think as normality returns, that will gradually start to manifest itself even more so. And given that, if you look at market reports, the areas of the market that maybe aren't performing as well in terms of house price growth are city centre flats, then they represent potentially an opportunity for savvy investors.
And the same to you, Anthony. What are your views?
Yeah, I agree with both Rob and Richard that I think the knee-jerk reaction at the start of the pandemic was, as we know, a lot of people decided to move out and go for space, etc. And I think maybe as we're starting to come out, some employers have probably readjusted people's mindsets as to how often they need to be in the office. And some people have spoke to clients recently who have moved out and are now having to stay in a hotel for 1 or 2 nights a week because they've been told to be in the office more often than they anticipated. So, and I think as well with the job market at the moment, there's probably people that are going to be moving firms, and the firm that they're moving to is going to have a different opinion as to where people work. So I think there'll be changes around with people sort of coming back to the city over the next year or so.
Thank you very much for your answer, and thank you all for joining me. That is all we have time for, and I hope you enjoyed today's discussion. See you next time.